everybody? It's Tortoise Investing coming at you today with another 5 dividend stocks you can buy and hold forever. These are going to be high yielders, 4% or higher in the dividend yield. So this is for y'all out there looking for a little bit more dividend income from your stocks. Of course, with higher yields, usually come with a little bit more added risk. So always invest at your own discretion. Now, very quickly, if you have not, please hit that subscribe button and join the 360 that have already done so. And make sure to hit that like and comment on these videos. I greatly appreciate it, and it helps get them around, makes the algorithm real happy. So without further ado, let's go ahead and take a look at them. If you came here for just what they are, today we're going to be taking a quick look at Avi, T. Rowe Price, Altria, AT&T, and Truist Financial Corporation. So if you came just for those, thanks for dropping by. Make sure to do the things. Now, let's go ahead and take a small deep dive into these. So, Avi, they got a dividend yield of 4.09%. I think the payout ratio is somewhere around the 40s or so. This is wrong. So we'll take a look at the revenue. Over the last 5 years, the revenue has been increasing at a rate of 15.52%. The free cash flow has been increasing at a rate of 20.79%. So very, very nice. And the EPS has been increasing at a rate of 14.8%. So a very strong company in pretty much every department. They do have some debt at $59 billion. Their EBITDA is $19.66 billion, so that's right at the 3 times threshold that I like. I don't like to have 3 times more debt than I do EBITDA. But the good thing is, since 2020, they have paid it down from $77.5 billion to $59 billion. So they are focusing on getting that debt down, which you always love to see with the company. And Avi is down from its recent highs of 166, and here very recently it was at 165. So definitely something that has dropped a little bit. Might be a good entry point if you want a healthcare stock in your portfolio. Next up, we got T. Rowe Price. Over the last 5 years, been increasing their revenue by 6.24%. The free cash flow has been, they've had some years where it's kind of like bottomed out, but as you can see, it is going up into the right, in the right direction. This isn't their average. Their EPS has been mainly going up into the right. 2022, they kind of had the little hiccup there. Because there's technical recession last year, so a lot of your financial stocks were hit a little bit. The thing I like about T. Rowe is they don't really carry any debt. I love that. And they got cash on hand. That dividend just keeps on growing over the last 5 years at a rate of 11.75%. But here recently they have slowed it. They went from $1.20 to $1.22. But again, they are trying to figure things out. It's been a rough year for T. Rowe Price. They are down from their highs of around, about 222. So it's down over 50%, but strong company fundamentally. Strong company. Not really much here that I can see that I would complain about. Even return on capital employed's in the 20%. So very nice. Oh, I didn't look at the ROC here. Yeah, return on capital employed with Avi's growing as well. Woo. All right, next up we got Altria Group, one of them sin stocks, got a dividend yield of 8.37%. Take a look at the revenue here. It's been pretty flat-ish, slightly growing over the last 5 years. Their free cash flow has been increased at a rate of 11.26. This company knows how to make the free cash flow. Don't even mean to make it sound like that. In 2007, the drop off here is because that's when they split off from Philip Morris. But Yeah, overall things are looking pretty good for Altria. Their EPS has hit a little bit. Looks like they were going in the right direction, and then yeah, 2020 kind of messed with a lot of companies overall. They got some debt at 25 billion. Their EBITDA is 8.7, so that does fall right into that 3 times range. Even though their dividend is as high as it is at 8.3%, excuse me, over the last 5 years have been increasing at a rate of 6.07%. And they did say that they intend on continuously growing this dividend around the mid single digits. So you're looking anywhere from 4 to 6% continuously. And they're going to do that through the free cash flow that they generate. So it's going to be a strong compounder still yet. Even the last raise here was from 90 cents to 94 cents. And if you have a dividend yield that high, very nice, very nice. Return on capital employed has been right around 30% for pretty much forever and a day. And they have been doing some share buybacks, even though that looks like it's paused. So they may pick things back up. But again, today you're investing in these to get higher yields. And if there is a recession on the horizon, a lot of these might not be a bad idea. Now, Altria was, let's see here, over the last year was in the mid 50s range. So it is down around 16%. So it might be a good entry point for someone. Again, if you are looking for a high yielder, you're looking for a sin stock, out of Altria, Philip Morris, and British Tobacco, Altria is the one I like the most. So, yeah, let's go ahead and keep on ticking right along. AT&T got a dividend yield of 6.78%. We all know the story behind AT&T. They had just crazy amounts of debt, and then they spun off Warner Brothers, I believe, and they're chipping at that debt little by little. They are chipping at it. Their revenue has took a little bit of a hit. So pretty much 2022 and 2023, this AT&T is in a recovery mode. They are trying to fix something that is broken, and I honestly think that they can pull it off. If you look here, the debt was at 166 billion in 2018. It's down to 128 billion as of 2022. And it keeps on dropping. They did have to cut their dividend, but again, this company is in full-on recovery mode. The return on capital employed is rising again, and it is, in my eyes, it's at a pretty good valuation. This is a good entry point. It was in a 20-ish area, and it did dip its toes into the 14s, but 16. It's hovering around the low 16, high 15s mark. Not a bad entry point, especially if you're needing a telecommunication in your portfolio. And they are continuously gaining people that are over onto their plan and Verizon keeps losing people. So out of Verizon, out of AT&T is the clear winner in my eyes. And I do think that they're going to get things back on track. Next up, Truist Financial. I know banks are so risky right now. They have a dividend yield of 6.8% and a payout ratio of 45.43%. So, not bad, not bad. They are down. We'll take a look at that, trust me. The revenue's been going up at a rate of 12.27% over the last 5 years. Their free cash flow has been increasing by 17.81%. EPS has been increasing by 10%. This company's doing a lot of the up and to the right that you like to see. They got more cash than debt on hand. Another thing you love to see. Let's take a look at that dividend growth. Dividend's been increasing. It's raised 6.76% over the last 5 years. They did have a little 2020 pause, but a lot of things had that. And, I mean, for what it's worth, the return on capital employed is going up. They're doing a little bit of share buybacks here and there. But it is... I like this bank stock. As you can see here, shares of banks are trading higher in sympathy of PacWest, which gained after entering an agreement. So a lot of these banks are selling off some things in their own portfolio. their own loans and stuff they've got to collect in cash and just keep it for when things do get bad. And as you can see here, their free cash flow has been increasing, so might be a good entry point. It looks like it touched the 50s before the recent drop. It was as low as 26, is now right at 30.75. So if I was going to own a bank stock, I would definitely look at Truist. It looks like they've got things under control, and in my eyes, this is one of the big six or big seven. I forget what they could call, but there's a couple banks that are like too big to fail, quote unquote, and Truist is a part of those. And like I said, the dividend yield's so nice because of the recent drop. But yeah, that's what I've got for you. 5 high-yielding dividend stocks you can buy and hold forever. And yeah, hope you enjoyed it. Make sure you hit that like and that subscribe button. And hit me up in the comments down below if you have any questions. And until Friday we're going to be doing REITs. So see you then.